Welcome everyone to the fourth week of the Summer 2020 REIT Leadership Series at the Schack Institute of Real Estate. I'm Sam Chandan, Silverstein Chair and Dean of the Schack Institute. I'm delighted to co-host this event with my colleagues Adam Emmerich and Panovka, both at Wachtell. Adam and Robin are both also members of the REIT Center board. Robin is a member of the Schack Institute's Board of Advisors as well. Scott Robison, a member of our faculty and the director of NYU's REIT Center, is here with us as well. If you've missed any of the first, if you've missed any of the first in the series, we kicked off with Sam Zell, followed up with Mike Kirby, co-founder of Green Street Advisors, and then last week, Ron Havner, chairman of Public Storage and SureGuard and PS Business Parks. Replays of all of those are available on our YouTube site. We have a really exciting program again that takes us right through the end of September. Next week, Sherry Rexroad from BlackRock, really excited for Sherry to join us again. And then the week after that, Debbie Cafaro, chairman of Ventas, and obviously someone who plays a very visible and important role in our industry, particularly through her leadership at the Real Estate Roundtable. I want to take a moment to thank Monmouth Real Estate Investment Corporation, the sponsors of this series. Monmouth, throughout the year, is a stalwart supporter of the Schack Institute and the REIT Center, but also of our merit scholarship and need-based financial aid programs, which obviously have been more important in recent months than has ever been the case. Delighted today to be joined by Hamid Moghadam from Prologis. What a fantastic addition to our agenda. Adam will introduce Hamid in just a moment, but just a couple of points I'd like to make quickly. First, just a thank you to everyone at Prologis. The team reached out to us unexpectedly early in the pandemic, mid to late March, to let us know that they wanted to make a couple of additional scholarships available to our students with a priority on those demonstrating unexpected financial need. And all of us at Schack are really grateful to the team at Prologis for that. Again, as you can imagine, that kind of support has meant more and been more important to us over the last couple of months than it's ever been. You can find out all about Prologis at their website. They were founded in 1983, almost 1 billion square feet of real estate around the world, undoubtedly one of the largest owners of real estate on the planet. For me, one of the things that was most interesting is Prologis' annual ESG report, which you can also find on the website. The report for 2019 was just released at the end of June. It's right there on their site. A couple of highlights that I wanted to share just because they were really notable for me. Prologis now has 200 megawatts of installed solar capacity, a goal that they had set for themselves to achieve a year and a half from now, that they actually surpassed much earlier than anticipated, in part because ESG is such a priority for the company. They've also brought on a senior vice president to oversee their commitment to ESG. Another one that really jumped out for me, Prologis will be the first real estate company in the S&P 500 to be carbon neutral, which I think is a big accomplishment and really sets a high bar for the rest of us in the investment and operation development of our real estate assets. So again, stay with us with this program throughout the rest of the summer and into September. We really have an amazing lineup, but with that, to introduce Hamid, let me pass it on to Adam.
Hamid, it's really a pleasure to have you with us today. I think Sam gave both you and the company a great introduction. I just would add, this is an unbelievable story that you've created starting in 1983, I think it was. Soon after your graduation from Stanford Business School, you formed the predecessor company, which was AMB, including your Moghadam for M, and it was a ground zero startup from 3 guys in an office, and where you've come today. I'm updating my notes, every day it's a higher 52-week high on the stock price, greater market cap. I mean, obviously a lot of us are shaken and stirred by the pandemic, and we'll have a chance to talk with you about that as well. But in terms of business success, second quarter knocked the cover off the ball. I mean, it's firing on all cylinders. So it's a fabulous story, and we're super, super happy to have you here and to see you. You look great. But even better than you is the background. Not to pick favorites, but it's just an unbelievable background. And we didn't talk about this, but since you put it up, can you maybe we could start off by sharing with us a little bit about the property that's behind you and the story of it and how it fits in with the company's overall global business?
Sure. I think the reason, first of all, good morning, everyone. It's great to be with you and look forward to the next hour. I just picked this because it looked different than a normal industrial building. It's a multi-story building, obviously, in Japan. Two buildings, almost identical, and they are a couple of million square feet. I think they're just shy of 3 million square feet between the two of them. And I knew you were going to bring up ESG, so we picked a building that has a lot of solar on top of it. Being the largest owner of roofs, which is a distinction that I never thought of when I was going to college or whatever, it's natural to do these rooftop solar installations. So anyway, it's a project we're very proud of, and it's part of about 100 multi-story buildings that we have around the world.
And what can you tell us a little bit more? Like who is in this building? What are they doing there? What's the business that goes on there?
There are a couple of e-commerce companies there and a couple of express delivery companies. And I got to tell you, with 1 billion square feet, I never remember exactly what tenant is in which building. So pardon me for that. But I think there's also ZozoTown is in there, which is a big e-commerce company in Japan. And I believe a couple of express package companies are in there.
Great. Well, it's impressive. It speaks for itself, I think. Let's maybe start off talking about, the very recent past. And as you know, I mean, we could speak, for 3 hours or 3 days. There's so much to cover about the company and what you're doing and what you've accomplished. And we'll try and squeeze as much as possible in. And obviously, we'll do our best as well to answer questions that are already straight. I think the first question popped up at 12:30. So we'll do our best to talk to the topics that people are asking about and have a chance to address them. Q2 was a great quarter for the company. Can you give us a sense of why that was? Is it because of the pandemic? Is it because of how you positioned yourself? What were the key drivers of recent performance and why what's obviously creating so much enthusiasm for the company's story and for the stock price and with customers and so forth?
Yeah, good question. I don't think it was the pandemic. In fact, at the end of the first quarter, we reduced guidance as a result of the pandemic because we thought the business was going to take a hit and collections and credit losses and all that would be higher. But remarkably, the business held really strongly throughout the second quarter, and we went back pretty much to the guidance that we had at the beginning of the year pre-pandemic. But I think the reason the company is so well positioned is really not because of anything we did in the second quarter. Actually, we started working on this business plan when you helped us with the merger of AMB and Prologis almost 10 years ago, a little more than 10 years ago, actually, when we started working on that. And we took a lot of steps. As you may remember, the industrial real estate companies didn't fare so well in the last downturn, and particularly led by the old Prologis that almost went under, to be perfectly candid, and had a really busted balance sheet. So we started that work by really repositioning the portfolio in a major way. We sold in excess of $15 billion of real estate, did about $30 billion of M&A, developed a bunch of stuff. So we totally repositioned the portfolio with a focus on major markets. We fixed the balance sheet. We went pretty much from a junk rating to a single A, and we actually trade inside that these days. We don't want to push the rating, and we actually try keep the market from upgrading us. And the company's under 20% levered. So we fixed the funds. I mean, we had 24 funds with $14 billion of third-party assets in them. Now we have 9 with almost $50 billion of third-party assets in it. And, it's interesting. That's a part of our business that, because it doesn't show up in the market cap, people sort of forget about. But the platform today is almost $140 billion and 1 billion square feet, with some of it being in these funds. Anyway, not to bore you, but we basically invested a lot in addition to that in systems and processes, which is a really big deal when the company gets to this size. Just the operational efficiency of the company and what you can do with technology becomes pretty important. And I would say the most important thing we did starting 10 years ago was really integrate 2 very different cultures between AMB and Prologis. And that's where, as you know, a lot of M&A deals fall short, because somebody wins, somebody loses, and then the whole chemistry of how people work together goes down the tubes. And I think we were pretty thoughtful. Walt Rakovich and I worked very hard on that in the first couple of years, and we've continued to work hard on it. So those 5 things were really foundational steps that we took over that period of time that positioned us not only for the second quarter, but hopefully for many years in the future. The fun is just beginning. We really view that as foundational work.
And in terms of the fund business, I mean, is the constraint really capital, or is the constraint really finding the bandwidth to develop properties and buy properties? I mean, I can imagine, with the success you've had, people are beating down the door to provide you with capital.
Yeah, capital has not been a problem for Prologis for, I would say, 8 years. I mean, once we sort of did some of the things that I talked about and showed progress on that, we've always been flush with capital. On the public side, we haven't raised any equity, including ATMs and all this other hidden equity raises that people do for almost forever. But we've raised a fair amount of capital on the private side. We've also taken 2 parts of our business public. We took our Japan business, the operating business, public in the form of a J-REIT, and then took our Mexico business public in the form of a FIBRA. So we've tapped the capital markets in a variety of ways, but never equity, never, meaning in a long time, never equity in the actual company. Capital is not the issue. Sometimes bandwidth is the issue, but I think the biggest constraint is availability of appropriate properties. We are very picky, and a lot of people say, well, why'd you sell $15 billion of properties? Because there's a big difference between different qualities of logistics space. It's been hard to tell that, because we've had such a tailwind in this sector that the rising tide has raised all the boats. But if you get into tougher markets and situations like that, the different qualities of these portfolios are going to really show themselves. So we're very happy with the portfolio we have. The problem is it's pretty hard to grow it through acquisitions, because there isn't honestly that much left, particularly of size in the markets that we're interested in.
Well, with $140 billion of very high-class properties under management, it seems like a high-class kind of problem to have. Is that scale? How does that scale help you? I mean, obviously you've taken the company Prologis from up to that level, and it's amazing. And so when you look at it today in terms of having that unbelievable scale in the company, how does that help you as a business?
Great question. I start with the premise that actually scale is a negative unless you can really turn it into a positive, because with scale come a lot of disadvantages. You get more bureaucratic, you get slower, it becomes harder to maintain a culture. So the starting premise for me is that actually scale is bad unless you can turn it into an advantage. But just by virtue of getting scale doesn't really help you. You got to do something with it. And I think the things that we've done with it, obviously the 2 most obvious things that people talk about are G&A synergies, becoming more efficient on the G&A side. And, in the last 10 years, we have more than halved. Actually, our overhead as a percentage of our assets under management is about 40% of what it was before. So we've reduced it by 60%. And that's a big deal in a business which is a 6% return on capital business. If you can save 50 basis points on G&A, that's a huge, huge advantage. Also on the cost of capital. I mean, we today have, public storage that you had last week has a very good cost of capital because they don't virtually have any debt. But for companies that have debt, we have by far the best cost of capital, not just in the REIT sector, but in any corporate sector. So, and real estate is a capital intensive business. So that's also a tremendous advantage, but those are easy. I mean, those you get. I think the more interesting opportunities have been on the revenue side. And in terms of, and what I mean by that, you have a lot more information, so you can do better yield management of your properties because you really understand the market and what's going on in it in a much more organic way than when you're a small player. We have well over 100 million square feet in LA, so we see every deal, and in terms of visibility into what's going on in the market, it's a tremendous advantage. We've also been spending a lot of time working on a few programs, including one that's called Prologis Essentials, where we're bringing our purchasing power, our procurement power, not just in terms of things we buy, like construction, which we are getting tremendous savings by buying components and all that in bulk, but also in terms of things that we can buy and make available to our customers, including products that are used in warehouses, things like forklifts, racking systems, et cetera, and services. We're in a crazy business. We sign a triple net lease with a customer, and we basically say, you, Mr. Customer, you go figure out your pest control. You go figure out your garbage disposal. You go figure out all these things that you do once in your life, unless you happen to be a big multi-site customer. It's crazy. Why should they take the risk on snow removal or whatever? We have 1 billion square feet. We can diversify that risk for them. So by offering more and more of these services to customers, we're taking more and more of their pain points away from them and enabling them to really, we're trying to turn the business from just price and location to something more than that. And customer service is the key element of that. And a lot of people talk about it. We actually measure it with NPS on a regular basis, and we're in constant dialogue with the customers. And I would say in the pandemic, that in times of trouble, that proximity to your customer becomes much more important and visible to the customer. So we try to earn more stripes in downturns than in the good times where everybody's kind of doing a good job. Anyway, I can go on for hours talking about that, but the idea is to basically make life simple for these customers and take care of more and more of their needs in a more efficient way. And technology and scale are the two things you need to do that.
And scale is helping both, I take it, Hamid, on the sort of, being able to provide all these pain relief services on a more efficient basis, seeing the market. And is it also something to do with customers who are dealing sort of with you as a single source of supply around the country, around the world? Is it a globalization, increasing scale of customers as well?
That is absolutely the reason why we're global, is to take care of customer needs. Now, I would love to be able to tell you that our customers sole source their needs with Prologis and they don't talk to anybody else and all that. In my career, maybe that's happened a couple of times, but not regularly, usually when there's time pressure or something. But I think we're getting a larger and larger share of those large customers' wallets. And because of our global footprint, if you wanted a warehouse in Dallas and, there are probably 40 people that can do it for you, and it would be virtually indistinguishable in terms of product and delivery time and all that. But if you want to do the same thing in Mexico City or in, I don't know, Sao Paulo or, in China or someplace that it's a little more difficult to do that, then that becomes a real competitive advantage. And And it is by solving the more difficult problems for these multi-site customers that we hope to get the benefit of the doubt in case of a tie or in terms of a close situation, which is very competitive. And by and large, we do. Not in every case, but we definitely get more than our fair share of these opportunities. And I shouldn't say fair share because we really worked hard on trying to create that advantage. That's really where I'm spending the most amount of time, and the senior people in the company are spending the most amount of time, is to try to figure out what are the real pain points of the customers. Do we have a competitive advantage in delivering those products and services to them in a manner that they can't do for themselves, either by virtue of scale or complexity or whatever, and then really taking advantage of those opportunities in a good way.
Sounds like an incredibly synergistic, virtuous cycle. It's quite a story. Let me ask you about some of those customers and the trends that are driving them. I mean, e-commerce obviously has been an amazing force and has been transforming a whole variety of different industries, but at quite different rates. Has the pandemic been an inflection point in e-commerce? And just if you could, Hamid, give us a little bit of a sense of your relation with e-commerce customers and how they're changing right now, over the next 5 years, over the last 5 years.
Sure, be happy to. I think, I saw a chart yesterday actually from McKinsey that basically showed the progression of the share of e-commerce as a percentage of retail sales and sort of what happened in March of this year. And the title of the chart was something like 10 years of growth in 3 months. So I would say these trends were in place, and many of them just got accelerated and compressed in terms of time by the COVID situation. But they would have happened probably more gradually. Now the question is, are they going to stay at that level that is equivalent of what people expected in 2030, or are we going to give back some? I think they'll give back some. I mean, I don't think we're going to go from where we were, which is around 12% in the US. By the way, number is different in every different part of the world, to the mid-20s. No, we're going to give some back because people for sure are going to want to go shop and do other things after this is over. They would have been tired of getting cooped up at home. But I think this has now brought the advantages of e-commerce to a whole new demographic. Older people that really were not big customers of e-commerce. Now they sort of see the advantages of e-commerce and the convenience of it. So I think we've just brought in a whole category of new customers into e-commerce that is going to propel the growth of that industry. But this is not all about e-commerce. I don't want people to think that logistics is about e-commerce. We had a great business before. We have a fantastic business now by virtue of e-commerce. But there are other things going on because of COVID that may not be readily apparent. For example, for the last 20, 30 years, people have been looking at just-in-time inventory strategies, trying to squeeze inventories out of the supply chain. Just get it when you need it and don't carry inventory around. So the supply chain has been very lean. Because of COVID and a couple of other disruptions, actually, like the earthquake in Japan and other things that have raised havoc, the tariff situation with China, the world is becoming a much less predictable place. And havoc is the enemy of having a very efficient supply chain. Because if your supply is cut off for 2 months and you are running lean, you lose a lot of sales. And losing sales way overwhelms any advantages of efficient supply chain you might have had. So make a long story short, I think supply chains are going from just-in-time strategies to just-in-case strategies, where these supply chains are being built for resilience as opposed to just pure efficiency. Bottom line, I wouldn't be surprised if after this, people would carry 5-10% more inventory than they used to before this, regardless of e-commerce. And that could double the growth rate of demand for logistic facilities in addition to e-commerce for the next 5 or 10 years, just that transition. So there are a lot of dynamics that are going on in the industry. And, you know, as buildings are getting bigger, we shouldn't overlook the supply part, which has been the Achilles heel of a lot of real estate, has been overbuilding and oversupply when the market is good. But we haven't had that. We've had 10 years of good markets. We haven't had that. Why? Well, because in the markets you want to be in the major metro areas you want to be in, where the populations and incomes are, it's very hard to find a 50-acre site to build a large building to service the needs of the customers. So land is getting scarcer and scarcer. Buildings are getting bigger and bigger, particularly in one category. And municipalities are becoming more and more anti-growth in the areas where you have the affluent, educated populations. So it's a combination of supply and demand. I mean, we went into this downturn with vacancy rates under 5%. They had a 4 handle on them. We haven't seen a 4 handle in my career. I've been doing this for 37 years. So, so supply was in good shape, and this is really important. Not only vacancy rates were low, but utilization rates were very high. Sometimes vacancy rates are low, but people have leased a lot of space that they don't need because they're worried that they run out of space. So there's a lot of shadow space. And when the market turns down, that space comes back on the market. Not this time. Utilization rates were like 86%, which is a peak almost 87 was the peak. 86% going into the cycle. So there's not a lot of shadow space. You know, so I think the supply side is in good shape. You have a couple of new demand drivers, and that's what makes for a good market.
I mean, there are a couple of things you touched on there, or sort of referred to, and I'd be curious to get your take on them, and including because obviously, you know, Prologis is presumably thinking about these macro factors. So one is, you know, you talked about the displacement of brick and mortar retailers effectively by e-commerce, and that raises a question about what's going to happen to that glut of formerly retail premises. And you also touched on the concentration of income and population in the major metropolitan areas, and this is something that a lot of people have talked about, and particularly vis-a-vis the pandemic. We all know folks who've, you know, taken their families from New York to Florida, from San Francisco to Nevada, or what have you, and they're riding out the pandemic somewhere where they feel a little happier, or they're working from home, or they put their kids in school. What do you think about the long-term future on both retail space reuse, office space reuse, as well as the, you know, distribution of the population, particularly in the U.S., between big cities, small cities, suburbs, and so forth? Is that something that you're devoting thought to as when you think about the 5 to 10 year horizon?
Yeah, a little bit. We think about those issues, obviously, all the time. Let me take the retail question first. You know, our position on retail has been very clear since 1998, actually. If you Google AMB e-commerce Wall Street Journal, you'll see an article from 1998 where I'm talking to the reporter in Wall Street Journal about the emergence of e-commerce and why we are selling our retail portfolio. Most people don't remember that AMB actually had 1/3 of its business was neighborhood shopping centers. So not only we believed in this, but we believed in this for a long time, and it's like in paper, it's not revisionist history. So, and by the way, I don't think the problems in retail were caused by e-commerce. I think the problems in retail were caused by too much retail development. I don't know the numbers as well as I used to, but I think the square feet per capita is in the high 20 square foot per capita, 26, 27 square feet per capita. That's 4 or 5 times any other place in the world in terms of amount of retail, because we kept building format after format after format. Now, I don't think all retail is terrible, and I think there's some really high quality retail that's fantastic real estate, and smart operators will figure out how to make money out of those either converting it or reducing the amount of retail or reinventing the retail space and experience. So I think it would be a mistake to think that bricks and mortar retail is dead and will never come back. I just think a lot of commodity retail will have to get scraped and turned into something else. Now, the problem with turning retail into something else is this. You can't just take the back end of a shopping center and put a warehouse on it, because you've got all these operating agreements and reciprocal easement agreements and all this other stuff that ties the shopping center together as one operating unit. And the last thing you want to do is give an excuse to your two anchors who are not doing well to walk from the lease because you converted them third anchor to a industrial or logistic box. So there are property-specific difficulties, challenges that need to be addressed. There are entitlement challenges. I mean, cities really depend on sales taxes, and yes, those sales are going away. But as we know, it takes them a while, politicians, to figure out that things are happening. So they're going to resist that for a long time. And then probably the single biggest problem is the economic problem. The value of that retail box with a retail lease on it is substantially higher than what I would need to buy it at to convert it into something that our customers can use. But they are good locations by and large. They do have the conversion opportunity. It's just not as easy as everybody makes it sound like. We've done quite a few of them. We've probably done more of it than anybody, but it's one here, one there. It's not a massive, massive opportunity yet. I think it will become a bigger opportunity as more people figure out that not all retail is going to survive the next 10 years. So that's on the retail side, tougher than you'd think. On the demographic side, look, there is no way that the trends that were in San Francisco for the last 10 years would continue or should continue. It's crazy. I mean, kids coming out of school have to rent studio apartments at $3,000, $4,000 a month. That's not sustainable. So, and by the way, all these kids are getting to be in their 30s and they're thinking about starting families and all that. So I can definitely see a movement from the center city to more suburbs. Now, have you ever seen a Prologis warehouse in the center city? We're not in the center city. We are on the infill periphery of metro areas. And frankly, whether the residents are in downtown San Francisco, south of Market, or they're in Marin, or if they're in the East Bay or down the peninsula, just to take the local example, the warehouses that serve them are in the same place. Now, so the suburban urban thing, I'm not worried about. Now, you might argue that some people will move to Solano County or Napa and start living there. Well, the problem is if a lot of them do that, then the advantage of being in Napa kind of go away. So, so I think rural, if people think people are going to go back to living on farms, I think they're dreaming. I think I'm not smart enough to tell you whether the urban suburban thing is going to happen in every place, but it will happen in some of the really expensive metro areas like New York, San Francisco, other kinds of places, because the housing prices are ridiculous. And why commute 2 hours to work if you can basically be much more efficient? My assistant, Jamie, has lived in Colorado Springs for the last 3 years, and she's my only assistant. You'd never know, right? Did you know that? You don't know that, but it's been actually great because she doesn't spend 3 hours of her life going back and forth and commuting to the suburbs here. So I think we're going to find out that we can do our business, not every day. I don't think offices are going to go away. We still are social animals and are going to want to meet other people and collaborate. But I don't think there's no law of physics that says thou shalt live, work in an office for the rest of your life 5 days a week. It's just you can mix it up, and I think people will do that because this is showing that you can do a lot of things remotely.
Yeah, it's been an eye opener for all of us, obviously. Those really interesting thoughts, Hamid. One other thing I wanted to touch base with you on. You're in, I think, 19 countries around the world on 4 continents. You mentioned in your second quarter earnings call that, you know, collections had been great. Obviously, that's what led to the great results, except in the UK and France, where the governments had told people not to pay rent. And obviously, you're dealing with, you know, all different governments all around the world, in China and Japan and Latin America, in Europe and in the US. Do you think we're really entering an era of great divergence in economic performance as a result of such disparate, whether it's reaction to the pandemic or whether it's a broader, deeper based division of attitudes toward business and commerce?
Very complicated question, and I'm not sure I'm the best qualified person to answer it, but let me take a shot at it. I think in individual countries, the differences between people who have prospered as a result of this pandemic and people who've fallen behind is A, very unfortunate, and two, very real. I think that's happening in every society. The haves will have more and the have-nots will have less, and we need to address that. And this is a Milton Friedman kind of fan talking. I'm not some kind of a communist, but I do think we need to address that, and I think those differences are potentially very, very disruptive to civil life in a lot of these societies. With respect to differences between countries, I actually think the opposite. I think more and more countries, by virtue of technology and the spread of technology, are going to benefit from advantages that are created in society by and large, at least the places that we're investing in. You know, you see something come out in the US or some technology or China, and it's a matter of weeks before you see it everywhere else in the world, including some very underdeveloped countries. So I think technology is the leveler. They're not going to be even, but they're going to be more level across the world. But I think differences in individual countries are, particularly here in the US, are very significant. Having said all that, if you look at poverty rates over the last 100 years, this is the lowest poverty rate we've had in the world. I think poverty rate has gone from 70% a couple of decades ago to about 12% today. So, of course, it depends on how you define poverty, but on a consistent basis. So I think the world has made a lot of progress in terms of dealing with poverty, but I think the world needs to deal with this separation in outcomes for a lot of people. Because clearly what we're doing is not working. So, but I'll leave that to smarter people to figure out.
Sam touched when he introduced you in the session today on ESG and the solar stuff, and obviously the great building behind you shows the use of solar. In terms of broader, as a chairman and CEO of a one of the largest public companies in the REIT sector and generally, has kind of the ESG movement and all the other stuff, the Business Roundtable statement on corporate purpose, the ferment in stakeholderism. Do you find yourself, changing your views from the traditional kind of Milton Friedman views? Has this been a big deal for Prologis, other than in terms of the environmental stuff and sustainability stuff, which obviously is fabulous and great? And I'm just asking sort of more broadly in terms of being a public company. Has it had a big impact on you?
Yeah, I mean, if you go back to the first annual report that we published as a public company, that would have been the annual report. We went public in November of '97. So the first annual report that came out in '98, the back page of it, if you go dig that up, and if you don't have the time, I can send it to you, had 9 principles of corporate governance in it that we believed in, including things that at those days were crazy, like we will not reprice options. Remember that whole discussion?
Sure.
We wanted to deduct option value, and the accountants wouldn't let us do it. We had Prologis never had a staggered board. I mean, AMB, sorry, in those days. I don't know about Prologis, but so we were taking this stuff very seriously from day one. And I think Green Street has been coming up with a corporate governance scorecard for REITs for the last 20 years. I think we've come in once as second and every other time as first. So the commitment has been there for a long, long time. But having said that, and this is where I will reconcile the Milton Friedman comment. Look, ESG is not because I want to go to heaven. ESG is because it's good. I do want to go to heaven, but ESG is because it's the right thing to do. Now, it's the right thing to do for customers because because it's important to them and it makes your buildings more attractive to them if you're more focused on these issues. It's good for your shareholders because transparency and having very good, clear governance is good in terms of taking away the risk premium out of the way people look at your stock. So day one, when we were embarking on all this stuff, I told our people, look, if you can't show me the benefit to shareholders or customers or communities in a manner that the company benefits from, I'm happy to do it, but it's coming out of the marketing budget because that's all it is. If all you're doing ESG for is to go beat your chest and I'm doing all this great stuff, look how great I am, that's marketing. That's not real fundamental creation of value. But I think if ESG has a focus on shareholders, customers, and communities, then it's sustainable in its own right. And it doesn't take some act of Congress or something to do it. You do it because it makes sense. And I think things that people do because it makes sense are sustainable. People do things because they're fashionable. Those are not sustainable because fashions change.
That's fabulous. I see Sam and Robin are back live on the screen with us. We have 26 questions from the audience. It's 15:15. We're not going to answer all 26, I suspect. But Sam, do you want to ask Hamid one of the most popular, I guess, questions?
Yeah, sure. Before I do that, I'll just let attendees know in the chat feature I've shared a couple of links related to the points that Hamid was raising. The first is a link to the governance page at Prologis' website, so you can learn a little bit more
instant
about
service.
their corporate and governance practices, and also a link to the 2019 ESG report that they just released that's on their website as well. I mean, one of the questions that's come up is, a lot of the stars seem to be aligned for the industrial sector. A lot of folks, myself included, believe that will remain the case for many years. What are the underpriced risks facing industrial right now, whether it's the potential for overbuilding in some parts of the country, rebalancing of economic activity, whether it might be changes in technology that will impact demand for space, or perhaps even sort of in the consumer sector, over dependence on one particular very large e-commerce client.
Okay, so let's go down the list of the normal suspects, and I'll tell you which ones I think are real risks and others are unknown. So by definition, unknowns are risk. I think overbuilding is a risk in certain markets that are not very supply constrained. I think it's a very low risk in the really dense metro areas that have high educated populations. Because they don't want trucks and they don't want traffic and they don't want all those things. So I don't want to pick markets here for you because we're talking about 10, 20-year markets. But if you go and see a city with a bunch of rings around city center and a lot of flat ground, and the way you can tell that is get on the roof of an industrial building and see how many hundreds of miles you can see. If you're in that kind of market, it is prone to overbuilding. But if you're in a market where if you fly over and look at an aerial, everything is covered, that's pretty hard to do. So it depends is the answer on the overbuilding. And hopefully we've been thoughtful about the markets where we've focused, although we are in some markets that are less supply constrained than others. For example, Dallas, Atlanta, South Dallas, certainly Atlanta. There are a couple of places that are less supply constrained than LA, San Francisco, New York, places like that, but it's a matter of degree. It's not a 0-1 thing. I think this issue of what they call changes in trade wars, onshoring, all that kind of stuff, I think that is way overblown. and the reason I say this is don't listen to the politicians. Look at the numbers of the trade flows. If you look at the trade flows with China, they went like this and they went like this. By the way, that wasn't because of us. That was because China was shut down for 3 months earlier than us, and it's right back on track. We cannot produce all these things that we're depending on other countries to produce. And by the way, it's not China. All that stuff, a lot of the lower end manufacturing moved out of China to Cambodia and Thailand and places like that, Sri Lanka, or a long time ago. So we're not going to go back to manufacturing apparel or toys or that kind of stuff in this country. Are we going to make PPE? Or are we going to make more pharma in this country? You betcha. I think we're going to do that. But in terms of the stuff that's the bulk of the trade commodities, it's going to be very hard to do. Let's say it happens. Let's say I'm wrong and we onshore. I honestly don't care where stuff is made. I care about where stuff is consumed. And stuff is consumed in these major areas where people live and they have money in their pocket. As long as you're close to that, frankly, if everybody starts making all this stuff in the US, actually, that would be more demand for our product. So I think, again, that's not a credible risk. Having said all that, I think Mexico would be a beneficiary of nearshoring because it's relatively inexpensive and product cycles are getting much faster. So I think Mexico will be a beneficiary. I think a lot of people talk about 3D printing being a threat. Don't worry about it. 3D printing is great if you want to make one part and get it there very quickly, but it can't compete with mass production in terms of cost, not by an order of magnitude. So, and besides, you got to get the ink to where it's made. So it doesn't matter. I don't care if we're shipping this or the ink that will allow you to print this. So it doesn't matter. That's not a big deal. So what is a big deal? What do I think is a big deal? I think automation is an unanswered question. And we've spent a lot of time researching it and doing work on it. And it's a mixed picture. Automation creates demand for space in certain instances, in certain activities, and actually reduces demand for space in certain other activities. And if you really want to get into it, which we don't have time to do, Chris Caton, our global head of research, is going to have a paper coming out on this in a couple of months, and we can read all about it. But the bottom line is that it's a very mixed picture. And honestly, I'm not clear enough on what the net of it will be at the end. But that's sort of the biggest question among that. The killer risk to our business is the transporter from Star Trek. If somebody invents that, we are toast. Well, we're not totally toast. As warehouses, we're toast. We still own a lot of land in the cheapest product in a lot of good metro areas that can be converted to other things. But the warehousing business is going to be gone if we have a transporter. I think it's going to be a while before we have a transporter.
I think that's a safe bet. I'm just about to share a link to Prologis's research page in the chat function. But as I'm doing that, Robin, let me pass it off to you for the next question.
Sure. Hamid, so I'm going to combine a number of different themes in the questions. One is about opportunities in a post-COVID world. Short of inventing that transporter, where do you see opportunities when the world reemerges from all of this across all sectors of real estate? And the other theme maybe you can build into that is, we have this, if you were coming out of Stanford Business School now, you're 25, where do you head? What types of real estate do you think about? Is it going to be logistics? What is it?
Look, at the end of the day, if you're coming out of business school and you're passionate about real estate, I think all of these kinds of sector decisions and all that sort of thing are really secondary. I think the most important thing is, what's a really good company? Where are you going to learn the most? Where are you going to hone your skills? You shouldn't care about your first paycheck and how big that is. It's where are you going to be working for a really good boss who's going to mentor you, who's going to care about your career? What company has the right values and right culture and invests in its people? And just look around and see who the best practitioners have come from. What companies have a history of developing really high quality people coming out of there? Because I think at the end of the day, that wins. And, you know, whatever gets you out of bed in the morning. I mean, some people love retail. They should go do retail. There's always going to be opportunity to make retail money in retail. You might have to do it a little bit differently than money has been made in retail. So I think those kinds of questions are change all the time. When I was coming out of business school in 1980, I was 23, by the way. It was petroleum engineers. That was the cat's meow. You wanted to be a petroleum engineer. So, look, I don't see a lot of petroleum engineers running around today. So I think these things are very hard to predict. And at the end of the day, you got to go with what feels right and what gets you out of bed in the morning and excited about doing what you do. I think the key question, career question is, what would you do for a living if you didn't need the money and you could do anything you wanted to do when you got out of bed? Now, if you'd asked me at the age of 23 whether owning a bunch of warehouses around the world would be that, I would not have been able to answer that question. I didn't even know what a warehouse was. But I could tell you that I was interested in real estate. I never thought about anything else. I liked a business that related to people and deals because that's what I like. But when I got into it, I actually figured out that there are much more interesting things than deals. And that is, how do you create a company? How do you put a series of deals and individual transactions together and build a platform that has competitive advantage so it's a real business as opposed to a collection of assets? So anyway, probably a long-winded answer to a very simple question, but that's the way I think about it.
How about the second part of that, real estate in a post-COVID world? What, if you were to pinpoint a few areas where you expect big change and maybe opportunity, what would they be?
Yeah, I think residential has continued to be important and even more important, both for sale and apartments, because people probably are going to spend more time cocooning, not just because of COVID, but because eventually this thing will go away, but because of demographics. I think a lot of family formation and all those kinds of things are at a good demographic inflection point. Not quite an inflection point, but growth point. I think logistics will continue to do well. I would think that data centers would do really well. Tower companies would do really well. Anything that has to do with moving of electrons and atoms. Data centers and tower companies, electrons.
You're back to transporters.
Warehouses are moving atoms. Those guys are moving electrons. So I think those will be good. Honestly, I don't know about office because I can argue both sides, but I think there will be less probably demand for office because more people will at least spend a portion of their time not going to the office. So. And if that means only 10% less demand for office, it's a business that grows by 1% a year. So that's a lot of change. I don't know how long it will take and all that. But a lot of great office buildings can become very good residential buildings. I mean, there's nothing wrong with converting them. So it doesn't mean that you can't make money. It just means that maybe there won't be office buildings. I think good retail will do well, but retail as a sector, if you take the totality of it, by definition, is not going to do as well, to state the obvious. Hospitality, look, a great resort hotel is going to continue doing really well. I can tell you, I am not going to travel 100 nights a year. Not going to happen. Maybe 20. And so I don't know if you can extrapolate from one, but look, I'm getting a lot more stuff done, including this, by not traveling. So why do it? Now, if I didn't know you guys and it was the first time we were interacting, yeah, I'd want to sit across the table from you. But after you've known somebody for 10, 15 years, you don't have to be sitting next to them to conduct business. So it's got to be the more commodity-like sort of business hotel. But it could get converted to residential. It can get converted to senior living or something like that. I mean, senior living is not going to go away because people have gotten COVID in these facilities. They're going to have to fix that problem somehow. But demographics of that business are pretty good. So anyway, those are some random thoughts.
Your point about office space being repositioned for multifamily, I think is well taken. Here in New York City, we've certainly had the experience of seeing a significant part of our inventory in Lower Manhattan after 9/11 repurposed using Liberty bonds for multifamily space. Another question that comes up, you're a global company, as global as they get. I think 19 countries right now, most of Europe, North America, China, Japan, Brazil. Right now, I believe it's the case that Prologis doesn't have a physical presence in India or sub-Saharan Africa. Long term, what are your thoughts on, is the team evaluating on an ongoing basis the potential to enter some of these emerging markets?
So those long term, and I don't know how long term is long term, but at least Africa is going to be an opportunity for the next CEO to think about. The problem with Africa is this. The entire GDP of Africa, about the size of the GDP of the LA basin. And most of the stuff going in and out are minerals and commodities, and they don't go in a container. Okay, and consumption levels are pretty low. And South Africa is the vast majority of the total economic output of Africa. So it's a very small opportunity right now, and it is not in things that go in and out of containers, therefore warehouses, by and large. And then there are the governance issues that you need to navigate, which makes it difficult. So it's not a priority. India has all the things you want. It's got a big population. It's got decent education. You know, they have an emerging middle class. They are a democracy. All kinds of good things. The problem is that the ways of doing business have prevented us from staying there. We were there in 2005 through 2008. We actually had 3 offices in India. We looked at a lot of deals, but we just couldn't figure out a way of doing business there. And other people have. Usually it involves putting themselves, a lot of layers between themselves and where the problems really occur. And I'm not sure that's a good solution for a company with our things. Eventually, and we were very excited when the Modi government came into power that maybe that's changing. It hasn't, it's so endemic that it takes a while to change. But India at some point will be a terrific opportunity. It is a terrific opportunity right now. They've solved some of the structural problems. They had this crazy system that you had to pay tax from going from state A to state B. It was called the GST. They've fixed that. That was a big structural impediment to India. And today, if you can get warehouses up in India, you're going to lease them and you're going to make money. The question is, will you go in jail in the process of doing that? And I'm not smart enough to know that answer.
Adam, I'll pass it back to you to take us out.
I guess we're down at 1:30. Hamid, I would be thrilled to spend another hour or two here together with you. It's super, super appreciated you spent the time with us today. You know, I think it's been tremendously beneficial for the audience, and you know, we'll have the replay up. People can see it in the future. So again, thanks so much. Glad we were able to have it be so efficient, and looking forward to the next time, and even looking forward quite a bit to being together in person again.
That would be great.
So thank you so much.
It was a pleasure. Thank you for having me.
Thanks, Hamid. Appreciate it.
Bye-bye.